Welcome back, traders. Hope the weekend recharged you after last Friday's earnings-fueled sprint, because Monday served up a PMI miss that had everyone side-eyeing manufacturing slump, while tech kind of shrugged it off with a NASDAQ pop.
Yeah, that tech resilience is something else.
And IWM's gritty recovery above that trend line we've been watching since last week has bulls whispering about a potential springboard,
Definitely something to watch.
But with the dollar gunning for August highs and JOBY's earnings just days away, this feels like the calm before a volatility cocktail.
Could be. Things feel tense.
You're tuned into the Stock Market Summary series, and as you guys know, none of this is buying or selling advice. We're just here to provide market commentary and education, but nothing we say here is financial advice. Okay, let's get into it. So we had a decisively mixed session today. It really showed zero consensus out there.
Totally mixed. QQQ led the charge, up what, 0.48%?
Yeah, 0.48%. Pretty much pure tech momentum driving that.
Right. And SPY was more modest, up just 0.19%.
It was really leaning on that gap-up resilience from late last week, wasn't it?
It seemed like it. But the Dow, the DI8, that slipped 0.46%.
And that divergence, well, it tells us something crucial about where capital is moving, or maybe where it isn't moving.
Exactly. That DIA slip kind of confirms the rotation jitters.
Yeah.
Money isn't chasing old economy value right now.
Seems like it's prioritizing growth and momentum instead.
For sure. And what's fascinating is how the market initially dumped small caps, IWM, right at the open.
Yeah, that looked rough for a minute.
But then they recovered, clawed their way back above that rising support trend line by the close.
That's the line we highlighted last week, right?
The very one. It's acting like a magnetic floor. Bulls are defending small caps fiercely down there.
Suggests maybe an underlying risk-on appetite despite, well, the macro news.
Which was hard to ignore today.
Definitely. We saw the October ISM manufacturing PMI print at 48.7.
Oof. That marks the 8th straight month of contraction.
It's not just a number either, is it? It feels like confirmation of that industrial malaise.
Especially when you dig into the new orders and employment components. Real weakness there.
Yeah, you can almost see the mechanism, maybe the shutdown fallout, potential consumer wobbles feeding into the system.
And if you connect that macro gloom back to the technical picture.
It explains some of the sector moves.
I think so. It explains why consumer discretionary, XLY, led the sectors up nearly 1%.
While communications, XLC, fell the hardest.
Right. The market seems to be reading the manufacturing slump as maybe forcing the Fed's hand,
Giving those high-growth, high-multiple names a bit more room to run again.
That seems to be the interpretation today, yeah.
Okay, let's pivot to some individual setups that are kind of confirming this momentum tilt.
Like TSLA.
Exactly. TSLA popping to a new swing, high on decent volume today. It's just spitting distance from its all-time highs.
It's been consolidating in what looks like a crude bull flag.
Crude is a good word. It lacks that textbook precision.
But the pattern's there, defined by rising lows, compressed volume. If TSLA breaks those all-time highs, watch out.
Could trigger a major momentum cascade? Absolutely. But not all setups are that clear-cut, are they?
No way. Others demand real discipline, real strategy.
And that's where things get interesting, especially with earnings looming this week. Take JOBY.
Chopping right toward the lower bounds of its symmetrical triangle ahead of its report. Very tight.
And then there's XPE, sitting right at horizontal resistance within a weekly ascending triangle.
Both are coiled, just absolutely coiled and ready to break sharply one way or the other.
And Coinbase, post-earnings, it's sitting exactly on the support trend line of a massive daily symmetrical triangle.
These tight patterns, they demand you have a bulletproof plan. You need to manage probability stacking. Your risk rules need to be solid.
It's not about guessing, is it? It's about reacting.
Reacting to the break with calculated precision, whether bulls step up and accumulate here or whether it, plunges below that support.
That critical decision-making under pressure.
That's what separates consistent traders. Identifying the setup, spotting the optimal entry, knowing your exit before you even enter.
And look, that's exactly the kind of skill development we focus on teaching in the Grok Trade Mentorship program. Pattern spotting, probability, those risk rules.
Crucial stuff.
As always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode. And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way.
Yep, helps a lot.
And click subscribe, too, so you don't miss a beat. You can always unsubscribe later. Okay, finally, let's quickly check in on the risk hedges. Bitcoin took a real nosedive today.
Yeah, shed what, 3.5%?
Yeah.
Testing that critical 200-day moving average.
It's probing deep into that directional tug of war. We are definitely watching the October 17th low now.
A breach there would signal the bears have seized control short term. Big level.
Metals, pretty quiet.
Yeah, reflecting the mixed market view, really. GLD eked out a slight gain. SLV slipped marginally, about 0.5%.
Classic consolidation territory then?
It's like it. Loading conviction for the next move, but as a dollar.
Still extending its run towards that Friday, August 1st high.
Which was a major structural reversal point on the index, remember. So metals are facing a stiff headwind there.
That dollar level really feels like the pivot that matters for commodity pricing right now.
It really does.
So we ended the day leaning heavily into tech momentum, despite, the deepening PMI gloom and that pressure from the rising dollar. It's a market defined by tension.
Absolutely. And the central technical questions for you to watch remain. Can TSLA's 18th flirt result in a clean breakout that leads the broader indices higher?
Or will that pre-earnings coiling and JOBY's triangle finally snap sharply higher, rewarding the risk takers?
Two big ones to keep an eye on.
Drop your take in the comments. Have a great rest of the day, and we'll catch you in tomorrow's market summary.